Welcome to Agoracom Small Cap Best of the Best. This is George Cholis. I'm the founder of Agoracom, and with us as always, Alan Barry-Laboucan, Chief Market Commentator. Alan, say hello.
Hello, everybody. We got an action-packed show here with lots of picks, so we better get right to it, Georgie.
All right. So a lot of things happening today. QE officially coming to an end, and that, for some reason, drove gold down right at 2 o'clock. It drove it down pretty hard. Venture Exchange went with it. So let's talk a little bit about that for a second. We're going to keep I'm going to keep a running clock here, so everything's going to be about a minute. Why the drop in gold right after QE officially comes to an end when everyone knew it was coming to an end today?
Yeah, I think part of it was you noticed that almost all the commodities got beaten up, George, and the U.S. dollar was up. Rising interest rates, that's usually a trade on a currency that's going to strengthen. I think that's why you saw some action into the dollar today. I still don't believe it, George. Yeah, I believe that they're going to end it, but how long they end it for, I just don't see how you can take that much money out of the market when they have been the market since 2008. Who's going to replace them, and can they really let interest rates rise? You've got the debt in the country's at close to $20 trillion. Every 0.001% makes a huge difference in the multi-millions. And those are just some of the key reasons that I don't believe that the Fed. And the other thing is, I don't think the labor market is ready for this yet. You've still got a massive amount of people that are underemployed or off the workforce. The participation rate is brutal. I just don't see how the Fed can let rates move at all. Whatever they call what they're doing, I can't see them let it move.
All right, I'm going to do a screen share here, bring up what we're going to be talking about. So let me know. You should be able to see that right now in a second.
Got it.
All right. TSX Venture Exchange. There you can see 781.
Multi-year low.
All right. Well, we're back to. We made this call right here, right together. Look at this massive move, and I got to tell you, I'm surprised that we had this massive dip way back down. So that worries me a little bit, even though this last time we've been here is that, are we going to see tax loss selling make this even worse, Alan? Because I didn't think we were getting a second dip. I thought this was just a dip on the panic.
George, I look at that chart and I say, well, it's got to be the worst is over, right? Now you got a double bottom, second bottom slightly ahead of the last bottom. That to me is the kind of trend where I think it can go up from here. But then I have to take into consideration the tax loss selling situation.
Which is a month away, right? We're a month away. So do you play hero here? Or my gut tells me you got to wait. Even though this is a ridiculous price here, my gut tells me you got to wait when it comes to the really small cap stuff, because there's going to be damage. And the damage is going to come, and you don't know where it's going to be, so you keep your powder dry. Unfortunately, it's a ridiculous low, but we're into the glide pattern of a landing here, and I don't see any reason for it to turn around, especially with QE officially off and all that dollar strengthening, gold getting weaker. The next month and a half could get a little bit ugly. Okay, I may have lost Alan there for a second, so I'm going to go through some of the picks I made. Take a look here. Seabridge Gold is something I announced today. I started a position around the 740 range. Great company, massive amounts of copper, massive amounts of gold. You see when I bring up the chart here, it's got a really dicey history. All right, I do a lot of this on technicals, but a lot of big dips, a lot of big bounces. So last big move was here. Big bounce, big drop. Oh, we got Alan back. Alan, you can hear us?
I can. Fine, George. Sorry, I had some problems there, but I'm back.
No problem. So Seabridge Gold, I put out a buy today at 740 as a half position. If it gets down into this range here, which is the low mid sixes, 660, 670, I'll buy another half position, make it a full position, and sit on that, because this is just too good of a company with too much going on. And if you take a look at the 3-year history, this is a great place to be a buyer at the end of the day. It hasn't done you wrong. So Seabridge is one. After that, next one up is, you can see here, Tamarack Valley. Because we're going to go quickly through these, Alan. Why don't you give me, if you have anything specific for any of the picks, chime in. Seabridge Gold, any thoughts there?
Yeah, no, George, I like that chart. The company has a lot of gold in the ground in BC, well-run company. I'm with you on that one. I'd put that on my shopping list for tax loss selling, or for buying in between here and the end of the year.
All right, Tamarack Valley is what I also like. TVE, 482. You see it does a lot of volume, 750,000 shares a day. You're talking about $3 million in active trading. This has taken a hit. You can see its chart right over here. This has taken a hit strictly due to oil, and part of it probably being the TSX Venture Exchange as well. But oil's taken a dip. A lot of energy companies have been taking a hit. I'm liking Tamarack Valley. I don't think you got to buy it at 480. You can start there, but if it gets it to 450, then you've got to be a buyer. 450, 460. So it's on watch. It's not a hard buy right now. Alan, any thoughts there?
I like this one for 2 reasons, George. First of all, whenever a commodity, I always talk about this with you, whenever a commodity gets down to the average cost of producing it, I get really bullish. We made a few jokes about it, but I'm serious about it when I say, the other day we heard Dennis Gartman comparing gold or oil to, what did he compare?
Whale oil. He said oil is going the way of whale oil, and it's not going to be of any use. He lost his mind.
He is one of my best contrary indicators, George, and when he gets bearish on oil, when it's down at the average cost of producing, I know that it's time for the turnaround. So lately I've been adding a couple of oil picks to my picks. I like this one. Look at the chart. When the oil price was sort of stable, it was going up. That's a strong indication that the fundamentals are solid. This latest pull down, I think, is just short-term in nature, and is a good pick as oil gets stronger, because it can't stay down around $80.
All right.
Very long.
And I'll tell you this: if this was the first quarter of the year, I'd be making a strong buy on Tamarack right now. My concern is it's TSX Venture. It got to the mid-7s, traded a big part of the year, much higher than this. Okay, let me put some crosshairs here. Okay, so take a look at the sorry, it's on the 3-year there. So let me do the 1 year. So take a look at the crosshairs, okay? It's pretty much been above this level for the entire year. I think it's going to be the victim of tax loss selling. It may not be. I just don't want to be a hero right now, because I think there are people who are going to be taking losses, and it'll be. On the other hand, I'm joking the fact that oil should go higher, just because. I
think if oil gets higher,
how much lower can it get? When Gartman says it's whale oil, I think you got to go the other way. But I'm going to be patient, wait for 450, 460, and hopefully I can get it, and then that's where you buy. Next up,
hold on, George, on the oil price. I think the oil price move will sort of make the tax loss selling not as big of an issue for those in the oil play. So I think that it's a safe buy here.
All right. Next up is Virtuton Networks, VFX. Now, hold on. This is a client of Agoracom, full disclosure. So I cannot make any kind of buy, any kind of sell recommendation. What I do want to point out is this, though. Take a look at the fact that the company traded 875,000 shares today. It normally trades 184,000 shares a day. Today it traded 875,000 shares, down to 15.5, 16 cents. Now, this company announced just a little while ago earnings per share of 2 cents in earnings per share for the first 6 months of the year. All right, so even if it doesn't earn anything else, it's trading at 7-8 times earnings right now. I don't know if that's good value for you. I don't know if it's good value for me. I'm not making any kind of pick on this. But what I am saying is huge volume, massive price decreases, massive drops in price on big volume over the last. Let me bring up the Virtuton Network chart there for a second. All right, so take a look at that. As high as the mid-50s, now down here, and this business has only gotten better. There's no reason for management hasn't put any kind of bad news out. So it's something for people to consider and look at and say, why is this going on? Is this one of those situations? But I'm just pointing it out. You got to make your own decisions. Alan, any thoughts from your end?
Yeah, as that chart's been going down, George, the company's just been growing their revenue, and now they're growing their earnings. I mean, the question to me always with what for Virtutone was, yeah, they keep on raising their revenue, but how does it make its way down to the bottom line? And you just said that it's got 2 cents a share in earnings for 6 months. That's pretty significant to me. And when you're trading at 7.5 times earnings, I mean, sounds pretty reasonable to
And
me.
especially at that growth rate too, right? This is a
Yeah,
mature business
exactly.
that'll trade 7 to 10 times earnings. The company is outrageously growing its top line. So, again, something for everyone to consider and just look at as an example of how things are kind of going, wrong here on the venture exchange, and how it seems like babies are being thrown out the bathwater. Want to point out African Gold Group only because I've been following this company for a long time. It's got decent resources in Western Africa. Don't know if Ebola's played a role in the demise of African Gold Group here, but the company put out a statement the other day saying it has no material. So take a look at this. Beginning of 2014, the company's at 20 cents. It's lost 80% of its value down to 4 cents. So I'm a big believer. Anything that's over 80% and a company has no bad news. In fact, the company, like I said a couple of days ago, came out and said it has no material news on hand that would explain, because they got a call from IROC apparently, so they had to put out, and it says nothing out there. And here's what I like. It does about 750,000 shares a day in volume, did 1.8 million shares today. Put out some news that wasn't anything to really talk about. It had to do with metallurgy. But on a day like this, the company traded 2.5 times its volume. Again, another example of where the hell can this stock go? I'd almost be a buyer at 4 cents. I'd have to be a buyer. I'd have to at least take a half position at 4 cents and then sit and wait, because this is just a stupid price. Any thoughts from you on that one, Al?
Yeah, Africa is not really my area of expertise. I tend to look for gold and silver plays more in North America or South America. But yeah, it's an interesting one. Definitely, I got to look at it.
One more thing for me to point out here on the chart. I just noticed I went back to the end of
Yeah, I
2013
saw,
last
saw
year.
your pointer there.
Yeah, and it did get down into this level here. The looks like 5.5 as a scan was the low back here, and then take a look at this move that it made. I mean, that's just a monster move. I don't think it's going to make that kind of move this time, but being down at 4.5 cents, nah, I gotta buy that. Next up is Nugget, NUGT. That's the gold ETF. Closed at 16.93. They took a
That's
heavy
the
hit
one
at the.
for producers, right, George?
Pardon me.
Is that the producers one, the big caps?
I will tell you right now. Let me give you the
Pretty
exact.
sure it's
Let me give
the
you the exact. The investment seeks daily investment results before fees and expenses of 300% of the performance of the NYSE ARCA Gold Miners Index. So it
yeah.
triples the Gold Miners Index. So this is a very aggressive. ETF. It closed at 16.90 at the end of the day. And you'll see that's already back up to 17.05, 17.11. Did 13.5 million shares when it normally does 5.8. So it doubled its volume, had a 12.5% drop. I think you almost have to make the move here on Nugget, just because it seemed like it was a real overreaction. Set a 5%, stop loss on it, because gold could go lower. But that looks like a real overreaction. If we get just some bounce back tomorrow, you're going to make money on this one.
Yeah, for me, George, I'm a sort of a stock picker, kind of guy. Usually I don't go to ETFs that much. I'd probably prefer to pick the one that I think will perform the best, and that would be Goldcorp. That's in that ETF. But nonetheless, I'm very bullish on gold. Now, I just put out a tweet today that, it kind of annoys me that market commentators are so fearful of saying when they're wrong. I was reading an article about Rick Rule, and they pinned him down to where he had made a mistake, and he obfuscated and wouldn't answer the question. I've been bullish on gold, as it's been going down. I've been wrong for several months. It doesn't concern me. I think that I will be right I think that, I called it a coiled spring when it got to around $1,214. It coiled some more before it finished. But I think now we're into a more positive trend, and for those that want some exposure without a lot of risk, something like this might be what you want to look at.
Yep, I like it because it spreads out the risk in case you're not comfortable picking one specific stock. You've got NUGT. Want to talk about Twitter? I took this one in the teeth. I was long 44.3. I was bragging about this for a long time. Got as high as 54. I called it going to 75. It put out earnings yesterday that people weren't happy with. The numbers were okay, but there was just, the management just couldn't articulate its position. I'm still long-term bullish on Twitter for sure. Short term, it might have some problems, so I'm putting it on everyone's radar that if it gets anywhere near 38.50, 39, be a buyer. You don't have to be a hero here, so there's no reason
Pull your chart up, George. Pull the chart up so we can see it on the side there.
Yep, so there's the 6-month chart ever since I've been bragging about it. So I was a buyer down in here. Great run, great run, great run. I made this my Super Bowl call. Right around here. That's exactly it in the middle of August. So everything's going great, and it just fell apart. I thought this one here was profit taken, but then this massive dip here. I'm still, if it approaches anywhere here, and that's why I set that crosshairs there. If it approaches the $38.50, $39 mark, I'm a definite buyer. This is a global platform that isn't going away, and it's just got to monetize better, but it's not going anywhere. It's too important to the online social fabric.
Sure, yeah, I like that call there, George. I think it could have a chance of touching that 37.50 area, and I would get bullish on it there. I'm concerned about valuations on companies like Twitter and Facebook and stuff like that. But like you said, it's an important part of the media fabric, and it's not going to change.
TVIX. This is the VIX. And this is a 2 times this is a 2 times ETF.
Your call on that was very prescient, George. Right when it was getting very toppy, I was calling for a correction, and you were calling for it to get more volatile. Those two things usually happen together, and that's what we saw happen. And it's been a very good call for you.
All right, well, take a look. VIX has come right back off, though.
Oh, but then it came back down. Oh.
Yeah, made a huge run. So, a lot of money to be made, a lot of people making money. I was very happy about that. That was fantastic. I'm going to start being a buyer. I would start nibbling here in the 2.9. Why? Because volatility, guys, is not going away. I don't care what you tell me.
I agree.
Volatility is not going away. There's no kumbaya in the markets where people think everything is hunky-dory. No. So I think the risk-reward here, you start nibbling here at the 280, 290 range, 285, 295 range, and if it gets anywhere near the 250 range, you go all in just because if you think we live in a world with no volatility, then you're not reading the headlines.
Yeah, exactly.
USO, this is an oil play, Alan, so I know you like this, but this is the United States Oil Fund. I made a call on it back just right in here.
That's my kind of chart. I love it when you get beat down like that.
I bought this baby at about 30.45. I think you see that was the low of the day right here. Made some money, flipped it out at 31.30 the next day. Even though it did go higher, so I didn't make a complete profit, but I was happy with it.
That chart, George, I wouldn't be playing that for a short-term thing. I'd be buying it here at 30, 31, and looking to get up to 36 or so before I would be out.
All right. Well,
I'm a swing trader. You're more day trader.
Yeah, but it looks like momentum is starting to go its way. That's for sure. You can see from MACDs and things like that.
Look at how green it got since Dennis Gartman made that call a couple days ago.
I think he made the call on Monday. The guys and look at what oil's done. So I would like to take a position here. I don't think you got much to lose. You set a stop loss in the if it breaks $30. All right, if it breaks 30, you put a stop loss of 29.75 or something like that. But USO, you got to go long. So I'm going to move that up here actually because I'm buying it. But you got to go long on USO if you believe. And look at the volume on it today. Normally 5.7 million shares, 7.6. That's significant. You talk about 40% more volume in an ETF in something like this. You've got to go long.
That's massive. I guess many people are agreeing with Dennis Gartman today.
I don't think so. It ain't going whale oil, that's for sure. But let the guy have his say. And that's it. I was going to talk about Alderon. I made that call in the low 40s last week, and it did make it. I think we talked about, but it hit a high of where did it get up to? It got up to a high there of 66, a high on this day of 69. So you would have made a quick 50% off of that pick. Still trading in the low 50s, the mid 50s, and I'd be looking to reload again if it approaches the if it approaches the low 40s one more time. So that's it, really quickly for mine. Let's move really fast through yours, Alan. But you got to talk about some interesting news first. So we're going to talk about Cayden and Lundin Mining. Take the floor.
Okay. Yeah, and I'm not going to mess around with the charts too much today, George. Everybody's going to see similar charts with all my picks anyways. They've all been getting hammered down. I might pick them up. But here, the first two, I got three stories I wanted to talk about. One is Cayden Resources. We had this show on our big, the next big winter show back about 6 or 7 months ago.
Right, in December. We had them on in January.
Yep.
January of 2014, and they're at 50, 60 cents at the time.
Yep, and after that they had a takeover offer, and look at the chart now. They've taken that takeover offer. Agnico Eagle's going to take them out. Yeah, they've been a great performer, George, and just goes to show you, no matter how hard the market is, if you stick to quality, look at what can happen to your investment. And
here's a chart for everyone, by the way. So the company was on our show somewhere around here, and look at the fantastic year that it's had. So congratulations to Ivan and his group over at Cayden, and they did really, really well.
Exactly. The other story I wanted to talk.
By the way, what does that say? So what does that tell you? Let's talk about broader strokes just for 30 seconds. Good companies getting bought. Means you still got to focus on quality and will be rewarded?
Absolutely, George. Doesn't matter how bad the market is. Everything doesn't go down together. It doesn't go up together. You got to look for quality no matter what the market's doing. And a company like Cayden is an perfect example why. They had great results. Can't ignore them. Agnico Eagle didn't ignore them. That's why they put a bid out for the company and took them over. You know, that's the story in a nutshell. You got to always be looking for quality.
Big news out of Lundin Mining, LUN, on the TSX big board. 2 million shares a day on average, $5.50 stock.
I might have given you a bad quote on that one. I was looking for Lundin, the Lundin Gold, and I can't remember what the symbol is. Maybe you can put it up while I'm talking.
Yep. Why don't you talk about it?
The company used to be Fortress Minerals, I think, and then they've recently converted into Lundin Mining. Now, what's happened there is they bought out from Kinross the Frutal del Norte deposit in Ecuador, and this is going to be their cornerstone project. They're going to try and move the company ahead with that asset, and it's going to be their gold company. The Lundin family is very well known in the mining business. You and I, George, on this whole Frutal del Norte, you and your team were very negative. There was lots of commentary back when Kinross was taking over. I forget the name of the company now, but my feeling was that they were actually getting overpaid for that asset. And so, if you're going to get overpaid for the asset, well, sometimes you got to take the money. But now it shows that they overpaid for it, because they ended up paying like $2 or $3 billion for the company they took over, and they just sold it for a couple $100 million. So that's a real
couldn't happen to a. By the way, Fortress Minerals, at the end of the day, it was Fortress. I think that made the actual acquisition.
But then I think Fortress changed their name to Lundin Gold, and I pulled up Lundin, and I'm not certain how that all took place, but it's just been happening in the last week or so that they made that offer and that all happened. So, there's an interesting play. Look for Lundin Gold and keep an eye on it, because if they're able to overcome the issues that are in Ecuador regarding dealing with that government and that sort of stuff, they could have a fabulous winter here, because that is a world-class deposit down there.
I'm looking it up. I'm looking it up really quickly. Those are Aurelian Resources, by the way. So look it up while you're talking about the your other pick.
It's not. You know, that's a pretty pretty.
Well, why don't you move on to Cameco? Talk about Cameco and
Okay.
what they're saying about. By the way, like as I want to just express that thing, Aurelian Resources. They may have overpaid. Maybe you're right. They may have overpaid. Maybe those are the best Aurelian Resource shareholders we can get. I don't think so, because right after that, gold made some pretty serious moves at the end of the day, and the way it was all done was really unfortunate. They practically stole it from everybody, but. You know, we fought alongside the Aurelian Resources shareholders and fought that really hard. We were proud of that, and the fact that Kinross wasn't able to capitalize on it makes me extremely. Yep. And the fact that Kinross wasn't able to capitalize on it makes me extremely happy. So why don't you go on and talk about Cameco and what that means for what they've had to say about the uranium spot, the uranium industry. All right, so guys are going to hold on here for a second and see if Alan can join us. Looks like he's trying to come back in because this is his part of the. This is going to be his part of the show, but we're losing them here. So just give us 1 second. Alan, you back? No, he may be having a connection issue on his end. Alan, you back? You there?
I am.
All right. So you're going to go on and talk about Cameco. So why don't you go ahead and do that?
Sure. Yeah. Cameco had some news out today, and they were talking about difficulties that they're having. You know how challenging the market is for uranium right now. And you know the pressures on supply and demand, and you know long term I think that those pressures will be okay. But why I wanted to bring it up today, George, is I think this market is affecting companies like Fission Uranium. FCU is their stock symbol. We've talked a lot about Fission. They have a world-class deposit, but look at what the market is paying them for that world-class deposit. It's just it's quite incredible the way these uranium stocks are getting beaten down.
So is FCU, Fission Uranium, an example of something that's getting a baby being thrown out with the bathwater?
Absolutely, George. That's a world-class deposit that I have every confidence in saying will be a future mine, probably owned by a much bigger company because they've taken over Fission Uranium.
So we could get a Cayden Resources being done.
Absolutely.
All right, but what do you do with Fission in the meantime? Okay, if you own it, you hold it. Are you buying here, or do you? And I'm going to bring up a quick, since you want to talk about Cameco here.
I know what you're going to say, George, about tax loss selling, and
it's probably going to get pretty aggressive for Fission because there's room for it to drop.
Exactly. Most of the people that are in that stock are in it at much higher prices. This is at a yearly low. So they are a candidate that could get punished into the tax loss selling. I just don't understand how it can get much lower than it is right now. But I think you want to keep it high on your radar screen as a potential to take advantage when it's oversold. And I think it's oversold right now. But having said that, I think it could get more oversold.
Well, let's take a look. Let's take a look here. I'm looking at the 2-year chart. And I had made a call on Twitter a couple of weeks ago when things were getting cheap. And I actually used this specifically. I said the line in the sand for Fission is somewhere around 66 cents, and it actually 65. Sorry, it actually hit 66 and then bounced right off. You can see you can see what happened back here. So the question is, do we get back into this mid 60s during tax loss? And I personally, anyone who watches this show, anyone who's read my commentary, I never sit on the fence at all. But I am torn by the fact that Fission is extremely cheap, but at the same time, we're going to tax loss selling season, and it could get victimized. So I'm going to have to stick with my original thesis, which is I'm not going to be a hero in between now and December 15th, December 20th. Fission may take off, it may hold here, but other stuff is going to take a big hit, and I want to keep my powder dry, and I want to buy those oversold. Those oversold stocks, unless something like Fission does something crazy and gets into 55, 60-cent range. Otherwise, I think I agree that's a great company. It's going to get bought out just like Kadant. Pretium Resources for you. PVG is the next one. Trades on the TSX. Does about $1.5 million in volume, in dollar volume on a daily basis. Talk to us about Pretium in a minute.
Yeah, I think Pretium has to be one of my best picks in this past year when it got dramatically oversold, and we had lots of conversations about what was getting it down to 350 and why I maintained that I was still very confident in the company. They have this is another one with a world-class, in this case, gold deposit, and it's very high grade, very profitable to mine. I think that this is another one that I can be as confident to say that it will be a future mine, and it will probably be owned by a much bigger company because they've taken over Pretium. Pretium and Fission are on my two highest priority sort of chances to get taken over kind of calls, and I think that they are going to have that this will be an ultimate takeover.
All right. We got the chart here. If you take a look, you're right. This is where Alan picked it, where we're having massive debates here. I mean, absolutely massive debates. He ended up being right. Looks like, again, sitting at that entire year low right here. You can see putting the crosshairs right there, all right, where it's at today. You can see that it hit this low here and hit that low right here as well. So this seems like the low point for the year. You're comfortable being a buyer at these levels?
Absolutely. It's again, George, buy quality when it's down, and ultimately I think someone will pay you a lot more for this in the future.
You're not worried that gold is just going to take a hit just because of the QE2 and all? I mean, just QE coming to an end and all that. That junk.
If it was going to take a hit, I think it would have took a hit when it was getting hammered down recently. Down to that 11. What did it hit?
1180, 1185.
That should have scared everybody. Everybody, it didn't. I think that the bottom is in now. We can get more bullish on gold.
All right, Lakeshore Gold, LSG. Brought it up. Here's a chart. They trade on the TSX big board again. They do about 1.5 million shares a day. So based on its dollar price, it does $1.5 million in volume. There's a chart. It's been a great year for the company. 50 cents looks like where we started off the beginning of the year, as high as $1.35. It's sitting at $1, so it's been a double for people, and sitting pretty close to 200-day moving averages for you and I with a lot of these stocks is a really big level. So I'm going to say right off the bat, I'm going to assume that the quality is good.
Yes.
Because you said, by the way, you can see the chart as I'm talking. Can you see?
Yep, I can see it.
I want to make sure of that. So quality is good because I know you only pick out good quality companies, and I would say with that 200-day moving average not being breached in a long time, I'd be a buyer right here and wouldn't sell out unless it got below 85 cents. But I'm comfortable being a buyer. Go ahead and give us the 1 minute from your end.
Yeah, here is a company that George is a small producer that's growing its production, has a strong portfolio of assets. They've got a strong future ahead of them for the next couple of years. It's another example of, George, you always got to be looking for quality when the market gives it. You always got to be looking for quality, and there's a company that proves why you want to be doing that. The stock has performed very well in a very tough market for gold stocks, and so I think that tells you a lot about where they're going in the future as well.
Ascot Resources, AOT, trades on the TSX Venture Exchange. 155,000 shares a day, so it does about $300,000 in daily volume, which is pretty good. You can see that it was a relatively quiet company for most of the year until obviously it must have had fantastic news right here at the beginning of August. Big move up into the 230 range, 229, and still holding its own given what's been going on. Still sitting right around $2 here with the 50-day moving average. It's sitting right on the 50-day moving average. Tell us what you like about Ascot.
Here's another example, George, of a company that's made a really impressive discovery that, it's one of those emerging discoveries that obviously we're early into. The big results just came out in the last couple months. I think that this is one that you want to put on your serious quality list and just watch it for pullbacks and run-ups. I think that by this time next year it will be significantly higher priced than where it is right now. Great company or great team. John Coffin's running. This is a John Coffin deal. He's done it before. And yeah, so it's got everything going for it. Just had another batch of great results out. Super high grade gold there, George. I think that everybody should do their homework on AOT. Start to learn more about this one. This is like a junior Pretium to me.
BSM Technologies, GPS, 182,000 shares a day in volume, $1.65. So the company's doing, well over $300,000, close to $300,000 in daily volume. I was the guy who beat the drum massively on BSM. I'm still beating the drum. Fantastic business. Let's go back a little bit because we picked this in July of 2013 for the first time, somewhere in here. And look at this fantastic move that it made for us, especially for me. Stuck with it, and then once it started breaking down, I went on Twitter and said it's technically broken for some reason when it broke below $1.95. Got to as low as $1.25. I don't know how I missed that. I think somewhere in here. Well, I know it got down to $1.25 or so, $1.26. There it is, right in the middle of that panic sell in the big markets. I don't know how I missed that. I would have bought 10,000 shares in a heartbeat, but it missed it. Nonetheless, it's made a move back up. It's trading up into the $1.65 range, and we've lost Alan again. So I'll talk about BSM here. Go ahead, Alan. Talk about BSM. I was just about to talk about it.
The reason you missed it, George, is I think you were in a meeting that day, and you tweeted out that you were going into a meeting. And then the stock got beaten down, and you were angry because you missed it by the time you got back.
With my eyes closed, I would have bought 10,000 shares at $1.25. That's for sure. But hey.
Yeah, George, I'm having some real problems when I'm switching between screens here, so I'm just going to leave it on this screen. But I know that BSM just had some news out. Maybe you can pull that news for me while I'm talking. They had some news out that caught my attention. And that's why I picked it today, and I think that it's
change in senior officers was the big one.
Right.
Before that, they haven't anything new of any kind. They really no other news since September the 23rd about a conference. That was no big deal. Back in August, they had the third quarter results, but nothing of any significance over the last few months. And that's been something I've been really critical of.
No, but didn't they add a key person that check it out?
Chief Commercial Officer. Okay, someone called the Chief Commercial Officer. They announced on October the 1st.
Look at his bio a little bit, George. This is interesting to me. People are pretty crucial in every business, and I think they might have recognized where they needed some help there.
He was the VP of Sales and Marketing at a leading Canadian 3PL company, and before that, he was VP of Biz Dev at UPS. Responsible. So this guy's a deal maker, obviously, and but deal making hasn't been the problem for BSM, in my opinion. They've put out great news all year long about great contracts. Somewhere around $3, they did that financing, and ever since then, the stock has just taken a massive hit. I don't know why. I don't know what the hell happened there. I don't know if guys were selling off just because they bought to the private placement, so they're just freeing up some cash. But I think it's cheap. But I'm not going to be a hero on BSM until tax loss selling season is done. But long term, if you told me should I buy it right now and hold for the next 5 years, in a heartbeat, not even an issue. But as a trader between now and December, I don't want to buy it.
I get you. Let's move on to the next one. Lucara Diamonds.
Lucara Diamond, LUC on the TSX. There's about $1 million a day in trading volume. I'll bring up the chart here.
Yeah, Yeah, they just had a sale of their diamonds, George, and you look at that stock chart and you can almost see
Pretty
where.
pretty steady, and it's down right around the 200-day moving average here. It is acting like great support. I mean, let's go 2 years. So the 200-day moving average has been fantastic support right back to March of 2013. So you'd almost have to use that $2.11. Not that it's going to get there, but you'd almost have to use that as a stop loss. 205 you could use as stop loss to protect your position. Why should we be buying it here?
Well, George, I'm a big fan of diamonds. That's why I joined Dunedin Ventures recently because I'm so excited about diamonds, the long-term prices. While all these other commodities have been getting beaten down, George, diamonds are trading they're back to record highs again. So there's that's something to be said about that particular.
And not a lot of people following diamonds. I don't hear anybody talk about diamonds. So it's great and that means nothing to me, because if you're on the other side of it, that means you're early, and I like that. But why is it that we haven't got a lot of diamond talk for years now? Probably a good 4 or 5 years, when juniors, some were digging for diamonds, and why is that? Is just gold took over, or why? Or is it just too hard to make money there?
No, it goes back to 2008, George. A lot of the diamond companies that were involved in diamond exploration and development, when the 2008 economic collapse happened, the prices of diamonds got beaten down dramatically, and also the funding for exploration and development. Long term, you look at all the various different mines throughout the world, whether you're looking in South Africa or in Russia, or even Botswana, where all the key mining is. The youngest is coming from Botswana, and those mines were found in the early 1970s. The stuff in Russia, probably 60, 70 years ago, those were discovered, and the stuff in South Africa, 100 years ago. I mean, we're just not finding enough new deposits of diamonds, and that's why.
But do you need it? And then play devil's advocate. We all know about De Beers is complete controls diamonds. We've seen those reports where they've got they're controlling supply, and they're just stacking it. So they're controlling supply, but really there is a huge surplus out there. They're just stockpiling the stuff and locking it away. So you tell me why you're bullish on diamonds itself.
Yeah, well, I mean, George, the day that I don't think the day that people stop wanting to buy diamonds is over. It's now becoming more of a big thing in China and India as well. They're starting to become major players in the market, and as consumers of diamonds. And then you look at all this old production, and it's sort of this. You could ask the same question about gold. What is one day gold going to be? Like Nouriel Roubini called it a relic, a barbaric relic. I guess some people believe that's possible, but as long as people continue to want to put, wear diamonds and wear gold and use it as a store of value, I think that we don't have any problems in the diamond business. And with diamond prices so high, it kind of is the best argument against being too bearish about the long-term viability of people buying diamonds.
All right. Well, then, trading at 230, you can easily use 205 as your stop loss if it gets below the maybe even 195, because it could always break a little bit through the 200-day moving average. But nonetheless, you can use that. So we'll whip through these last couple here. U.S. silver and gold, 33 cents. It doesn't do a whole lot. You're talking about $16,000 a day in trading volume. And there's the USO chart over the last year. It's been held significantly higher. It's already down 50%. This is probably going to be a victim of tax loss selling. Why do you like it here?
Here's one that, good properties, good results, market ignores it. Why I picked it today is, George, it's looking like a bit of a triple bottom there for the company. I like to see those kind of things when the market gets oversold. You would say, well, why doesn't it go down further when it's under that much pressure? That's a great question. That's why I like U.S. Silver. I think this is one you want to put on your buying list for when stock tax loss selling happens.
All right, so you wouldn't be a buyer now, but something you want to watch for the next little while.
Certainly.
Corvus Gold, KOR, trades in the TSX. Again, not a lot of volume, about $32,000 a day. So I'm not, Al and I jab about these all the time, but if something's not doing a couple $100,000 a day in volume, it's tough to trade it out. It's another thing and that's for me as a trader. Al likes to buy and go long. So if you want to buy and go long, it really doesn't matter. But you've talked about Corvus before. I'm going to bring up the one-year chart here. Again, probably bad news because it hit a high of 218 back then, trading at 94 cents now. More than likely going to become a victim of stock loss, tax loss selling. But I do see what the point you're probably going to make here is you got this potential double bottom.
And result
not strong enough for me, but you tell me why you'd be a buyer here.
So you got a double bottom there. Also, they just recently had some very good drill results from their South Bullfrog project down in southern Nevada, and they had some really spectacular numbers on the gold. Definitely one you want to keep an eye on. I've picked this one before, George, when it was before it made that charge over $2. I think now is the time to be looking at it again, and it's a well-run company. One day I'll get Jeff Pontius, the guy who runs that company, to come on and do a show. Really sharp guy, great project. I like everything I'm seeing with the company recently.
Remarkable minerals. Now this is I kind of like. I'm intrigued here. First of all, R on the TSX. It normally does about 1.7 million shares. So even at 75 cents, so let's say it does 1.3, 1.4 million dollars, which is more than great. But today it did 4.2 million shares. What happened at Remarco? And it looks like they had some news today. I'll look at that quickly. Let me see if there's a headline. Looks like they announced at. That's odd because their Q3 results came out at 5 o'clock. So was this volume in anticipation?
Oh, they had some news out yesterday.
Oh, right. They were granted a federal 404 permit. They were halted, and then they started trading again yesterday. So it looks like volume has been high as a result of that. So okay, so a lot of action, and I like that. And you see, 3 times, or not 2.5 times the normal volume. I'll bring up the chart.
While you're bringing up that chart, George,
right.
Here's a company.
Yeah, go ahead.
Here's a company that's been plugging away down in, I want to say Carolina or something like that, but I think I'm wrong. You can see it on their thing there, and they've got a project down there that I've been worried and wondering.
South Carolina, flagship project, the Hale Gold Mine in South Carolina.
Yeah, it's had some really great results in the past. I think it's a future mine, but they were having questions. Are they going to be able to permit it? Are they going to be able to permit? If you go back on your chart there to a few years ago, George, you're going to notice that the company was a heck of a lot higher in the past. And I think the question has always been, are they going to be able to permit this thing? Well, now they've got that permit, so I think it's game on again for Remarco.
Yeah, I'm going to read the quote for everybody if you don't mind. So, they're pleased to announce that they got their record of decision under Section 404 of the Clean Water Act. This is for the Hale Gold Mine. It says here that that there are no administrative appeals left for anybody who is against this situation. So what it says here is the issuance of the environmental impact statement process is officially complete. The present CEO said, "We're exceedingly proud of the Hale project. I'm gonna yada yada here. Satisfied the applicable federal environmental with the culmination of that. There's our team members. We have engagement transparent with local community stakeholders. Thought we will continue to manage and operate Hale under the highest level." So is it producing right now?
No.
Or they want to put it into production?
Yes. They've done all the drilling. They've done all the work. It looks like a viable thing, but were they going to be able to get the permits? Now that they did, that's why it's trading so much volume today, George, because the game's on again with Remarco.
Well, there's the 1-year chart. You can see that it started
Go
off.
back do a 3 or 4 year chart, George. You're going to see how it was much higher in the past. Even go
Right,
back.
here's a 3-year chart. Here's a 3-year chart. So hasn't been that much higher. I'm going to go 5 years. So go back 5 years. It's been as high as close to $3. Hit a higher here at 288. So yeah, it's got room to breathe. If it just got this right now, if it just got this permit, and that means it's all clear, clear sailing ahead. I gotta admit, even though I don't think it's going to be a victim of tax law selling, given the amount of volume. Mind you, 4.2 million shares only moved 1.39%. So I don't know if you had a lot of selling into that, or if there was a cross down there. We'd have to look at the results better. But even last week during this crush, it got down to a low of 60 cents. And it's trading at 73. So you're okay there, I think, to make a move. I pay attention to it, but how long do you think they're producing?
You as a trader, this has got some good volatility in it too. So I think you want to look at it for that reason as well.
Well, if it breaks through 77, I think it really gets off and running to the races.
Well, when I
look, the 200 and the 50-day are right at 77. So
I was just going to say those converging trends there. Short-term trends are pretty attractive to me.
So it gets through here, and I probably become a buyer. Last one, Perpetual. Let me do this. Perpetual Energy, PMT, does about 200,000 shares a day, about 280,000 dollars in volume trading. $1.37 PMT. Here is the 1-year chart. Looks like it's going to do. A full circle. Start off the year around the $1.10 range. Moved up nicely with more than the double, and now getting back here, has done a double bottom itself here in the $1.30 area here. What is about Perpetual Energy we should know?
Well, here's another one, George. That chart is very similar to the oil company you picked earlier. And
Tamarack.
What I've been really trying to find people in these oil, I think the oil is oversold here, and I think it's going to pop. And I wanted to try to find some under $5 kind of picks, and Perpetual Energy just had some results out. I looked at the chart. I like the results. I see that they're moving in sympathy with the pressure on oil in the last month and a half, 2 months. But I do like the trend prior to that, from October last year until July. This was during a more less volatile time for the price of oil. It shows that they're growing nicely. So I like a lot of what's going on in that chart, and it's a play on oil for me as well.
All right. That wraps up the show. Let me take off screen share here.
Well, we weren't joking, George, when we said we had a lot of companies to talk about. I think we covered it as quickly as we could, but we can never I'm never going to make apologies for running a little long.
No, and let's remember to tell everybody, by the way, let's make our disclosures. First of all, do not take anything here as buy or sell recommendation. Al and I talk about what we would personally buy or sell. You may have a much higher or much lower risk tolerance. You may have different goals. You may be 90 years old, need every dollar you need, and you don't want to. You may be paying the rent with. We don't know what your situation is. So if you're going to act on, all this show is meant to do is to give you ideas as to where we're looking, what kind of stocks we're looking at, and why we're looking at them. You've got to do your own due diligence. You've got to talk to your own financial advisor, and wherever there's a conflict, if we either own something or we're about to own something, we'll let you know. By the way, Sean Reed, here's a nice quote from somebody watching the show. Said, "Thank you very much. I love the show. I'll be watching what I missed in the first half when you put it up on YouTube." Sean, you're welcome. Thanks for the feedback, and I hope all of you feel the same way.
That's another great thing he brought up, and we always like to hear that people like our show. But he said if he missed it, and if you missed any of our past shows, there's a place on Agoracom. I think it's called Agoracom/Alan Berry, and you can find all of our past shows on there. So if you ever wanted to go and do any homework on past shows that
I got this thing called Google where you can just search Agoracom's best of the best and find everything for you. Whether you like to watch on YouTube, on our blog, on your site, on Twitter, it'll find it everywhere. But yeah, you can definitely watch all of these. They're on YouTube. Just search for best of the best, and you'll find all of them going back.
we're not supposed to send people to Google. We're supposed to send them to agoracom.com.
Oh, they'll come straight there. Where else are they going to go? You know, where else are they going to go? But great show, Alan. Great picks, especially during this really tough time. And, you know, you got to play this tightrope act where you like the value, but are they going to take a bigger hit? I'm going to wait for tax loss selling, but nonetheless, at least we're generating some ideas. So thanks again for another great show.
Yeah, and that's what it's all about, George. We're just trying to give you good ideas. Hey, people disagree with me, they agree with me. That's not the point. What it is about is trying to find quality, talking about that. You do your homework. That's what's the most important. But, you know, we do a pretty good job of screening out the junk and trying to bring you the best.
And by the way, our last stock pick competition is ending in 2 days, so we'll talk about those results next Monday. So make sure watch out for it. We'll be putting out the notification to tune in next Monday to watch us. Until then, have a great day. Have a great night, everyone. Alan, thanks for joining us again, buddy.
Hey, thanks a lot, George, and everybody have a great one. We'll see you soon.